chart here. This is a logarithmic chart. A logarithmic chart. And as you can see that every single time we've had these scares in the marketplace, all it's done is what? It's just made the trend. Because remember what I said just a minute ago, right? The market has to go down. If we're in a very big bull market, it has to go down more to make the trend, to form the high low, and then away we go. And then come down to form the high low. And that's where, like, you never want to get emotional about the market going down, because all it could just be doing is setting up, just like the tariffs were, for another good buying opportunity, right? And if you look at this, is the logarithmic chart here, and as you can see, where this is typically what the cycles is going to be here, right? Now, it may play out like this. We may have another 3-4 years to go to 2030, right? Or to 2030, 4 years to 2030. Actually, that's 5 years to 2030, right? So roughly around that level there. We're 12 years in, right? We've got another, say, 4 years to go. So that's roughly what we're seeing through there. But if we have a look at this here from a big long-term perspective, again, this is the chart here, but if I take everything off the chart now, look what, actually, I'll bring this everything. Look what happened through here. This is the monthly charts. Notice the monthly charts here. Notice these big long-term monthly charts. Now, this is a logarithmic chart. Notice what happens. We go through these very big sort of periods of what? In the very big bull market like we're in right now, the 52 moving average on this monthly chart, logarithmic chart, you can see the market goes up, and it's not until the market sort of flattens out that we go through a multi-year sideways. Flattens out, multi-year sideways. But if the market is continuing to make higher lows in the marketplace, and also the moving average is trending up, even if the market does give you this here, which was that was 1987, right? You probably heard about the 1987 stock market crash. All that was that there. Now, if you're looking at a context of this here, what was that? That was just what? The market goes up. We had the stock market crash. It formed the higher low, and then away we go. Then it flattened out. So as you can see here, what's happening here now is what? One, we're forming these higher lows, and it's interesting, isn't it? This level through here, like if I just bring this up through to here, actually, you know what? Let me show you this level here, right? So if I zoom right in now, let me zoom right into this big, this here is when Trump was being elected. You know, that's it. The crash is coming. This was the COVID crash. But what was this? Low, higher low. What was the moving average doing? Still trending up, right? And then the recession fears back in 23. Remember that, right? And this is now COVID. Oh, sorry, this is the tariff here. So as you can see that, I think one of the best things that I try to do myself is not being emotional reactive and say, okay, what's really going on here? And the reason why is because, as you can see from just looking at this level here, there's been some amazing buying opportunities in the last 10 years from this level here. And this is one of the reasons why whenever we do see that next 10% drop in the market and the fear starts to come out, just keep an eye on this. Remember this chart here, because if I take everything off the screen again, remember where we're at, right? We're at this level from here. And so I actually have a target of around that 55,000 level on the Dow Jones. And so if I look at the same sort of as you can see, the scaling on these charts here has been logarithmic, as you can see from there, right? So this is logarithmic here. So this is looking at the longer term charts from here. So if I do the same thing for the NASDAQ, and this is the actual NASDAQ here, look at the same thing for the NASDAQ. Every time we've had these drops here, and it's really interesting, isn't it? It's one thing I've learned over the last 20 years of my trading career, and especially that video number 2 in the free trading course, guys, that link in the description there. I will talk a lot about this sort of the way these markets work when it comes to trend, how the trend is formed, and so we can just understand. And one of the big things, as I've been talking about in today's video, is about, you know, when the market does go down, that doesn't mean that the market is topping. It just means a lot of the times it could just mean the market's now creating that higher low because it's now forming the trend. We have a pullback, we have a bit of profit taking, we have a bit of a cooling off period, and then we get going again, right? And even these big long-term NASDAQ chart, look at this NASDAQ chart. Hey traders, just a quick heads up. I'm actually giving away free access to my Mastery Trading course for a limited time. If you go to johnspeedgift.com, or there should be the first link in the description. The fact is that 80 to 90% of the stuff that you learn or you use on these trading platforms is a complete waste of time. And only about 5 to 10% of the stuff that you actually learn and use is going to move the needle in the positive direction for you. And that's over the last 20 years, I've put everything that has helped me move the needle in the positive direction in this here, and I've left everything else out. So, go to johnspeedgift.com right now and grab complete free access to this Mastery Trading course. NASDAQ long-term charts. Firstly, we have this trend line coming up through here. But look at this here. Every single time, lows, higher lows, higher lows, higher lows. See, even though we actually had this multi or this 1 year drop through there, what was the long-term monthly charts doing, right? It was what? It was going up and came down to create the high low, and up and came down, create the high low, up and create higher low, up, create the higher low. So as you can see, we're still in a very big bull market, right? So if we did get that, which is a 10% correction, is the top in? Well, if I'm looking at my long-term analysis, I'm taking it off the screen, what's the moving average still doing? Still going up, right? And are we still creating major higher lows? We are, aren't we? And so as long as now, when it comes to that level here, if the market continues to make higher lows, that's just a nice healthy bull market. That's what a nice healthy bull market is about. Market will go up, it'll come down, make the higher low. It'll come up, make the higher low, come up, make the higher low, come up, make the higher low. It'll start to do that. So as long as we continue to make these higher lows, the market is in a very strong bull market at that time. The sign that the bull market is over is if we get one of these, if we get the previous low broken. So if the market does roll over and it does pull back, is it going to be a higher low? But then it starts to come back down to here, and we break that low. So now, as you can see, this is now what? A lower low, isn't it? It's no longer making higher lows. This would be the sign to watch out for, because then we're probably likely to rally, make a lower high. And then we're likely to see, a significant pullback in the markets. If you look at the last big crash, which was the '08 crash, right? I'm just looking at this level from here. I'm just trying to show you this here, so you can sort of not be sort of freaked out by the swings of these markets. Low, higher low, higher low, and higher low, right? Well, look what happened here. Notice right there, the market changed tune, right? And then we had the 2008 crash from there. So if we look at the NASDAQ, if we look at the composite as well too, this is now the composite NASDAQ. And as you can see, if I just bring up my charts here, this is actually a very beautiful long-term, very big long-term monthly chart. And as you can see, like one of the things that I've learned about is that, and you've probably heard many times from people like Adam Koo and so on and so forth, that there's a lot of noise in the markets. One thing that I really started to learn from Patrick Bet-David from Valuetainment, right? Is it noise or is it signal? Signal is like, what's the truth about these markets? And noise is, that's it, top 10 stock market crash, we're going to the moon, that's it, and all this sort of stuff, right? That's just noise, isn't it? Like, because there's a lot of noise. And typically, the noise will follow the market, meaning when the market's down 15%, the noise is going to be what? Stock market tops in, that's it, the big recession coming, that's it, the market's all over, that's, and then the fear and the emotion of the major public can go down the noise side of things. But the signal is the smart investors just look at a big long-term chart like this here and they're like, well, okay, we had a low, we had a higher low from here. Right, the market ran up, we actually pulled back, then we made another high low, the market pulled back, came down here, and now we found support. Now, there's actually nothing wrong with this big bull market right now. We're still continuing this very secular big bull market ever since the '08 period from there. Make sense? And we've continued to make these high lows. Now, I'm looking at a monthly chart here, by the way. So periods like this here, we may get 1 year of pullback, but that 1 year pullback was just what? And it's so fascinating, isn't it? We went up for about 2 years through here. 2 years of up. So then all the market was doing is what? The market pulled back through here, just to cool off, just to create what? The next high low. And then we had a big move for a couple of years. And then we had a sharp drop down to here. X marks the spot when it comes to this support line through here, plus also this level through here. And then away we go. So if the NASDAQ gets a little bit of a pullback through here, don't be sort of, you don't want to be getting sort of reactive, because as I sort of mentioned at the start of this video, that there could be a real good buying opportunity coming soon. And that's what I'm looking for from there, because I'm keeping an eye on these big long-term charts. And this is signal. Signal is, what's the truth about this level here? Is the top really in? But then the noise could be, let's insert something that we think is going to create the top in the markets. Or we could just say, you know what? This is probably going to continue. So therefore, there's going to be a good buying opportunity in the markets. And so it's always the hardest thing, isn't it? Like even just looking at the, looking at the markets, even from the S&P 500. Like this is the S&P 500. Right? It's very, very hard to buy it when the noise is what? We saw what happened down the... What was the noise down the bottom here? The noise was... We know the noise, right? Extreme fear, that's it. Trump's going to crash the market, that's it. That's the noise, isn't it? But signal is what? Signal to me is... we're actually one in a very big bull market from here. Okay. We also actually had, so look at this here, see that we also actually had more like an X marks the spot, didn't we? We had this resistance back here, became support, and then we rallied out. So if I'm looking at this bit, once again, if I take everything off the screen now, and I look at this from a big long-term monthly charts, is this another 2008 stock market crash? Is it another one of those? Well, if I look at this market here, you can see here that we actually had this very big move up. We had a low point, a higher low, and then we also had this form high low. But it's when we started to break these lows from here, that's when we started to get, what's going on there. But we're not getting that right now, are we? We're actually getting major markets making lows, higher lows, and the moving average is still trending up. Notice the moving average even started to flatten out through here. But if I go to the moving average now, what's actually the moving average doing? The moving average is still very strong, right? So this is where, I believe we have a lot more upside to come when it comes to this level here. And this is where the noise of this market can be so deafening sometimes. And that's why I've always I always try to find it just... The best traders, the contrarian traders, right? We know that. So the best traders have been buying these major dips and then holding them for a couple of years, and then letting them rip. Big higher lows through here. So next time we do, where the market is right now, if I go and let me bring up this chart here, and this is the monthly chart here, right? So if the market does have a 10% correction, let's say the market does drop 10%, that's going to be down there, right? That's going to be from there. Let's say the S&P drops 10%, maybe even a little bit more. Where's the trend still? The trend's still up, right? What's the noise going to be at that time? The noise is going to be what? The noise at that time is going to be, it's going to get you more veered towards the emotions of that's it. The top is really in, and so on and so forth. But if you've been trading the markets, I would say for 5 years plus, you would know that how many times has that noise become reality, or the noise to become an actual real signal. Most of the time it's not, right? In fact, every single time in the last 5 years, in 10 years, every time we've had that noise, markets down 10%, we get the noise, fear, extreme fear, that's it. The public, the talking heads, the thumbnails, the YouTubes, okay, the noise is going to say that. But what's the signal? The signal is up, came higher low, higher low, higher low. Here, we're probably going to form a higher low, and then we're going to get a real big move to the upside. So that's why I truly believe that we're looking at the stock market and looking at these big long-term charts and just do this for any market out there, right? Step back from the big long-term picture. And this is where sometimes I do like to look at, say, candlestick charts like this here with a lot of moving averages and all that sort of stuff. But there's also a lot of stuff going on here, right? So if I'm just trying to see what's the real big long-term trend here, And what is the truth here, so I can actually make good decisions, so I can make money. And if I can start to bring on, say, something like even just we're at the black open highlight close chart. I'm just looking at the highs and lows. Even maybe just putting on one moving average to see what's going on here, I can get a very, very clear. So if we do get, once again, if we do get that through there, is that really the top in the market? Not really, right? It's actually, no, there's a 90% probability that this is going. And I always say, you never know exactly when, right? But the next drop that's coming up the next few months is probably going to introduce a lot of noise around insert crash and so on and so forth. But the signal to me is just another one of these, 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 and another one of these through there. Make sense? So get ready, because there could be a good buying opportunity, and then that could be a real good, even just a nice good trade for a good 3-4 months riding into the end of the year, because I do believe quarter 4 is going to be really, really, really amazing from there.